The 90s was the rise of Infosys, HDFC, Asian Paints, a lot of other companies that you mentioned. And now that's what the Sensex is. And now you will see a different Sensex, I would say, in 10, 15 years. It's just started, right? So I would say that that's going to happen, and some will fall wayside, which has happened in the past as well. Not all companies which show the glimmer of hope will succeed, but I'm hoping a lot of these will succeed and build really large categories and be part of Sensex eventually at some point of time, because the nature of the world is changing, the consumption is changing, enterprise behavior is changing. It's more software dominated than it used to be. And you will see the rise of these companies eventually at some point of time. But I think we'll have to be patient.
Hi, wherever you're joining us, I hope you're doing well. Welcome to Startup Fridays, conversations with accomplished entrepreneurs and VC investors. I'm Hari Arakli, and in this episode, Vishal Gupta, a partner at Bessemer Venture Partners, one of the world's oldest and storied VC firms, talks about his career as a venture capital investor in India and gives us an overview of the opportunities he's excited about in this country on the basis of what Bessemer calls roadmaps that the firm develops for various sectors. In this conversation, which was recorded on November 26th, Gupta also talks about how, from among today's privately valued internet unicorns and those that have recently gone public in India, will arise the next generation of blue chip companies and large-scale wealth creators in the country. Okay, Vishal, thank you for doing this. Really appreciate your time.
Thank you.
You're a very low-profile, high-impact VC in this region, and through this conversation, we're kind of hoping to remedy that also a little bit.
I hope it remains high impact.
So from a general audience's perspective, maybe you can just start with that a little bit. Give us the story of how you came to be at Bessemer, and we'll go from there.
Yeah, maybe I can start all the way. I started my career almost 22 years back.
Mm-hmm.
I passed out of business school at a really hard time, just around the dot-com bust era. And I was lucky to find a job. Went to HCL Technologies. And by serendipity, I ended up as an executive assistant to the CEO of a large subsidiary of HCL, which was in banking and financial services area. And I still remember my first conversation with the CEO. I walked in, and when he learned my background, that I was like a fresh MBA grad, he looked at me and said, "Oh, you wasted 2 years and a lot of money. Let me teach you how to build a real business." It turned out to be a great ride. That subsidiary grew from almost 20 million to 100 million in revenue in 18 months flat. And I was really hooked, and I did everything under the sun, sort of from building Excel sheets for large RFPs, to board decks, to board conversations, to M&A conversations, to finding new facilities, to hiring, to vetting people. So it was a good, very good overview of how businesses are built and how businesses are run from an operator perspective. And that operator was phenomenal. He was a gentleman called Sanjay Kalra. Sanjay then went on to become the Tech Mahindra CEO. When he left, I left. And I went to a really large conglomerate again called Reliance Industries.
Sanjay was the one who hired you, is it, at HCL?
No, the way HCL hiring process works is they hire about a large 40, 50 people from campuses, and they put them across different subsidiaries and different roles. And you have to pitch for those roles. And I pitched for that role, and that's how I ended up being Sanjay's EA.
Please carry on. You joined Reliance.
Yeah. This was sort of early years of Reliance starting diversifying away from its core oil and gas business, and I was part of what you would call the treasury team. There were two treasurers at that point of time, Amitabh Jhunjhunwala and Alok Agrawal. Alok was also the CFO, and Amitabh also used to run a bunch of other financial services businesses for Reliance at that point of time. And this was a small team which was doing, I would say, again, sort of new business initiatives for Reliance. There was a project around credit cards. There was a business to be built around primary dealership, which is around bond trading. There were the two life insurance, general insurance businesses. There was the whole Ad Labs acquisition that happened at that point of time. And Reliance was starting to build out large infrastructure projects themselves. And one of the things that essentially happened was they thought that as they do that, there will be a lot of ancillary ecosystem that will benefit from that. And they uh, did a JV with Temasek, what was called a Reliance Temasek Power Fund. And again, by serendipity, I would say I got involved in some of the deals that that fund was doing because this was the same team which would help doing that. And that's how I came to know what private equity was. I had no clue what private equity or venture capital meant. And that's when I met the Bessemer team in middle of 2005, I would say. And I was sort of quite intrigued by and also quite impressed by their own history of many decades, having built lots of businesses on top of technologies and founders and building really large global scale businesses. And that's what really drew me to Bessemer. And that's how I came on board Bessemer early 2006, I would say.
And do you recall how you ran into Bessemer? Was there a particular deal that you all were looking at together, or what happened?
No, Bessemer hadn't set up the India office. They were still early in their process. And actually, it was a posting at one of the IM ecosystems of my business school. That's how I came to know about Bessemer. And that's how I met the Bessemer team. Actually, the room that we are sitting in is named after one of my partners called Felda Hardiman. Felda was one of the pioneers of Bessemer, started in 78, was here till 22, 23, till he retired. And he also in the middle taught at Harvard Business School for almost 15 years as private equity and venture capital. So, along with him and Rob Chandra, who was an Indian origin partner at Bessemer, we're looking to build out the India team early on. And they had hired one person already, Anand Sridharan. Anand is at Nalanda now. And then they hired two folks alongside. There were three of us effectively, Siddharth Natyal and myself. And so Siddharth and I joined literally next day to each other. This is, I think the day was 30th May 2006. I still remember the day. And we had an office in the Trident Hotel in Bombay, like two rooms joined together. One was a conference room, and the other was three of us, and we had our assistant Meher Chinoy. Um, she a sprightly Parsi lady, still sprightly, still at 70 now. She's 70 now, and that was how Bessemer kickstarted in India.
At Indian Institute of Management, do you recall what that posting said? Which
No, it. I don't know what that posting said. It said that it had the history of Bessemer, I
I
think,
see. Okay.
which was the most intriguing part, I would say. And the story is really inspirational if you think about it. Like Andrew Carnegie and Henry Phipps were partners at Carnegie Steel in late 1800s, It merged with Morgan Steel to become US Steel in 1904, became the first billion-dollar corporation on New York Stock Exchange. Andrew Carnegie became the richest guy in the world. Henry Phipps also became very wealthy, and he put up $67.5 million in a trust and named it after the technology process of Bessemerization of steel that they used, uh, and put the name Bessemer on the door. And he wrote two paragraphs, which are still etched on the wall in Bessemer, which talks about building large businesses on top of technologies, newer technologies that came around. And Bessemerization of steel was a new way of making steel, which allowed them to become the lowest cost steel producer in the world. And in a commodity, when you are the lowest cost producer, you also are the largest, and that's what benefited them. And so that's the history and origin and sort of the inspiration to stay true to that character over the last, I would say, almost 100 years plus now. But of course, it was very different era, different ecosystem. So Bessemer early was doing pre-World War II era companies like W.R. Grace, International Paper, Ingersoll Rand, that sort of stuff. In the 50s, 60s, a lot of suburbanization and banking, community banks that came up in the US. Bank of New York, which eventually became Citibank, was an early investment from Bessemer. But I think things really changed in 76 when we opened up our Silicon Valley office. And sort of we started investing predominantly in technology, healthcare, networking, communications of the 80s, 90s, the internet. And then we were a predominantly US firm, I would say, till that period of time. Boston, New York, and Valley, three offices. Um, and a bunch of my partners made investments outside US. One was they backed a gentleman called Mo Ibrahim, which Felder did. And Mo Ibrahim was actually building a telecom network primarily in African countries. As United Nations went from one African country to another, it spawned into Celtel, which became the largest Pan-African national carrier. And one of my other partners, Rob Stavis, invested uh, in another communication technology at that point of time, which were two kids out of Estonia who were building Skype. That became very large eventually. And sort of that meant that you could have venture size return outside of the US. And then we started looking at what are the uh, places outside of the US. That's what my partners tell me, and that's how India came into being, I would say, in the 2005 2006 timeframe.
What was VC like for you at that time in India? And maybe you can also illustrate that with the first company that you invested in.
There was no VC, I would say. It was all private equity. VC did not exist in the classics. There were VCs, I wouldn't say that so, because I think a lot of people had done in the dot-com era of 99 2000 a bunch of VCs, but it was a very nascent. There was no internet, there was no smartphone ecosystem, right? So it was all private equity style investing that was happening at that point of time, which was true for Bessemer. One of the first companies that I got associated with, but one that I had not invested with, two companies actually, Motilal Oswal, and the other was Shriram EPC of the Shriram Group. That's how I kickstarted my career, spending time on those two companies. Those companies were just getting closed as I walked into Bessemer at that point of time. So those are the two earliest memories of the two companies that I got involved very closely with from Bessemer.
In the industry, it must be quite well known, the investments. For a more general audience, can you say a little bit about how and why you decided on them, how much money you put in them?
Um, I think Motilal Oswal, the whole thesis was that as equity culture in India grows, they were the dominant domestic franchise. If you think about 2005, 2006, there were a lot of global firms. There was JM as an individual, it was JM Morgan Stanley. There was Kotak with Goldman Sachs. There was Merrill Lynch before it became DSP Merrill Lynch. And then there were Bank of America, or actually Merrill Lynch was there. Bank of America did not exist. It was Merrill Lynch and Bank of America merger happened much later. So it was a dominated by US global investment banks, either individually or in partnership with local founders and entrepreneurs. And they were building a very domestic broking franchise. Predominantly, it was a broking platform at that point of time, and very research oriented. Um, and The whole thesis was as uh, equities and domestic capital becomes larger and larger, uh, they would benefit disproportionately from that ecosystem versus the global folks. And that's how we invested in Motilal Oswal. It was a very small check, alongside with New Earn, a hedge fund that used to be run by um, Arshad Zakarias uh, at that point of time. And that's how we invested in Motilal Oswal. It went actually public fairly quickly, within like 1.5 years of our investing or something like that, just before the 2008 crash. Uh, um, and it was a very successful IPO, just given both Ramdevji and Motilalji's background. Um, and we stayed invested for a while before we sold all our ownership, I would say, in 2010, 2011. I don't want to, I think the dollars may be public in nature, but I don't necessarily want to talk about either the dollars or the amount that we took off from the table, just given the dynamics of, sort of we are SEC regulated, and I don't want to make any faux pas by talking about specific numbers.
Fair enough. But in VC language, would you say it was a multi-bagger or a really good outcome?
It was a good investment for us.
Yes. Okay. All right. Um, if you sort of fast forward to today, can you talk about what's different in terms of the founders that you encounter who pitch to you, the startups that they're starting? And I know that you've looked at the India big picture itself very deeply, but also within that, fintech is something that you're an authority on. Maybe just talk about the general evolution of Indian entrepreneurs today that you're seeing, and then we can get into the fintech aspect as well.
Yeah, I think, of course, the ecosystem has changed dramatically, I would say, over the next 20 years. I would say the entrepreneurs of today, also, whether you're selling to the consumer world or to the enterprise world, several of them actually are coming out of having built or scaled companies where they were either the first employees or early part of the CXO teams, have seen the journey of 0 to 1, 1 to 10, in some cases 100 to 1,000 as well. As a lot of these companies have scaled, I would say, in the 2010, 2020 era. And a lot of founders are now coming out of that ecosystem where essentially they understand the chops of building teams, hiring great people early on, building large businesses, though may have done it for somebody else inside an ecosystem and now want to do it for themselves. And so it's a far more seasoned, experienced executive teams as founders that you meet today versus, I would say, the 2010-11 era, when a lot of them did not have that same advantage, because there was no large startup ecosystem in India which had grown and seen a success, and therefore they had the experience of doing it. But they had the opportunity because India was growing rapidly, internet adoption was happening rapidly, software was getting adopted rapidly, and they had that advantage, not necessarily having the executive experience of 10 years, 15 years, having built large companies. So now it's the other way around, where you have the experience, you still have the market, but it's no longer you have it's more competitive than it was 15 years back.
And in terms of the ideas that they're bringing you, what is anything that is noteworthy in terms of how things have changed? For example, are they now capable of going very deep in niche areas? And was that different earlier on? How have things changed in that way?
So, how we see it is different than a lot of other people. We are what we call as roadmap investors. So, and road mapping, think of roadmap as literally a map to find great companies in a specific area. And this road mapping process is unique to Bessemer, has been around for 30-40 years. Um, and the way we do it is we look for discontinuities in the ecosystem, changing of revenue pools, shifting of profit pools, regulatory changes may be driving something, new platforms emerging, new consumer behavior changing. So there are lots of discontinuities that happen in an ecosystem, and we find these discontinuities and try and go deeper and see what the future would look like over the next 10, 15 years in an ecosystem. And therefore, because we want to be ahead of the curve, and so we build these roadmaps early on. So I can use that as an illustration to give an example. For example, we built a consumer internet roadmap in 2011 timeframe, I would say. These were very early days of internet, sort of, I would say, 2G, 3G connections. Of course, some smartphone penetration had happened.
In 2011, your first fund was already up and running, was it?
We've always invested out of our global funds. So till very recently, when we raised an India specific fund, but we would invest out of our global fund. So this was, I would say, again, 2011 was an early internet era, tens of millions of internet connection probably, and few million smartphones at best. But we could potentially see what was going to happen, and sort of relating back to my own experiences, like the whole, when I was inside Reliance, the whole Reliance Telecom journey, the erstwhile Reliance Telecom, which when India was at 16 rupees a call, went from that to almost nothing. And tens of and hundreds of millions of people got a mobile connection, not a smartphone at that point of time, but lots, it got access. And I would say democratized distribution in some way to a large extent, right? And then, of course, the internet on top of that, and the smartphone just accelerated it. And when Geo came in 2016 with 4G connection, it changed the game. But I would say in that 2011 era, we thought that India would similarly leapfrog the offline retail ecosystem, because offline retail ecosystem in India was shopping in India was a chore at that point of time, and if you lived in a large city like I used to in Bombay, it definitely meant like big weekend trips to do anything, getting anything done. Um, Traffic was still bad. It's worse today, but it was still bad even at that point of time. And the epiphany was that a lot of these, what you would call door-to-door economy, will happen, where essentially Flipkart was there, Amazon had just entered, Snapdeal was there, and a lot of these horizontals were getting built at that point of time. And we thought there will be few verticals that would emerge, because in India, supply is very fragmented for every vertical. And if you could stitch together the entire supply side of the framework, the demand always existed. It was the ability to serve that demand in the most the best possible customer experience at that point of time. And that did not happen because usually the supply chain broke down at the back end, either on the fill rate, or either on availability, or on cost, or something else. So people who were sort of building a full stack supply chain, that's what we would call, uh, taking on the onus of the experience, essentially for the customer end to end, versus just relying on who I will pick stuff and deliver to your door. That's when we sort of got a bunch of companies that we sort of tracked and invested in, starting with, you know, uh, grocery vertical. We did Big Basket in 2015. We did Swiggy in 2016. We did Urban Company in 2015. We did Farm Easy in 2016. We did Live Space in 2015. And the common theme, if you think across all of them, was they were all focused on full stack, where they said we will own the customer experience, not necessarily relying on the existing supply chain. And whether we own it or we stitch it, because each one has a different way of doing it. Urban Company had a different way of doing it because it was doing services. Live Space was different. They didn't have to put up manufacturing of furniture, but they could stitch it together at the back end and deliver a customer experience. Grocery was different, and Swiggy was different in the sense that they were the first one to say we'll own the delivery ecosystem as well. Um, uh, it doesn't necessarily mean they would be on my roles, but sort of, they are gig workers, but essentially dedicated to the platform in some form or the other, right? And that essentially meant that delivery of a customer experience is how these companies really scaled really well, relative to others who may be doing sort of like marketplace model at that point of time. I think that was the early epiphany. But as you see, what evolved from being full stack marketplaces to now, there are not many large categories left if you think about from a scale perspective. And now there are lots of these full stack platforms that exist. So the next wave that we are seeing is the changing of consumer behavior to direct to consumer brands. Now there are lots of shelves which are empty on the quick commerce guys on this, and the Gen Z ecosystem doesn't necessarily want to buy what their mother's brand or their father's brand was. Like growing up, I remember the one thing that I never wanted to buy was a Maruti car, because or a Bajaj scooter, because that's what my dad would insist on, or a Bata chappal, right? Those three things that you would never want to buy, because it's just like normal rebellious behavior that you would have as a kid, right? And that sort of is now for this Gen Z, which also, you didn't have money then, but today's ecosystem is slightly different. It's a much more affluent India than 20 years back or 25 years back. Access to consumption is easier, access to sort of spend is easier, and therefore a lot of these new brands are emerging in the ecosystem, which basically appeal to those specific, I would say, uh, target groups. And this could be premium and this could be sort of mass premium, both the segments. The Indian customer still remains value conscious. So if you go for brands which are, then the market size becomes tiny, which are very premium. But as you go towards mass premium, the market size can be very large enough to build several hundreds of millions of dollars of companies. So we just invested in a company which is doing the same on the sports, equipment, fitness, and clothing, all three combined effectively, to effectively, what I can sort of say, build an online decathlon in some form or the other. And that, so we think this roadmap shift, because consumers change, behavior changes, and therefore newer opportunities arise, and some opportunities die because they are no longer present, because either either it's become very competitive or they're very large ecosystems that have emerged. So it's very hard for newer companies to build large scales. For example, it's very hard to build a horizontal e-commerce ecosystem in India today, right? You have the 3 4 big quick commerce players, and you have the two large incumbents, Flipkart and Amazon. So it's going to be very hard and crazily capital intensive to build anything. So that essentially, so some roadmaps have to evolve over a period of time.
Is there a precedent, would you say? I mean, people generally like to compare with China or with the US. I mean, to give us a sense of where you see India is today and how you look at it in terms of where it could go? Is it simplistic to say India is where China was X number of years ago, or is there a better way of how would you look at that?
Yeah, I don't like that comparison. I think I think the easiest way to justify anything for last 30 years in an Indian context has been per capita. Or we drink 30 ml of cola. The US is at whatever 5 liters. I don't know what number it is. Like it's per capita. We have a lot of people, so everything per capita is going to be very small. That's the easiest way to do it. I also think this comparison to China and US is different. US is a 25, 26 trillion dollar economy. China is a 21, 22 trillion dollar economy. We are a 4 trillion dollar economy. We have to remember that. And yes, we are going from 4 trillion to whatever 7, 8, 9, 10, whatever you can believe over the next decade, depending on who you are, whether you pick a 6% compounded growth rate or 8% compounded growth rate. I'm no macroeconomist to tell you what's going to happen, but if that's the trajectory, it's still not a 20 trillion trajectory over the next decade, right? It will happen, but it's probably another 20, 30 years out, hopefully. So the comparisons fail. And therefore, what you have to look at is a uniquely Indian lens. And let me give you a great example on Fintech we were talking about. If a lot of our investing in the US, one of our two largest successes, Shopify and Toast, which are tens of billions of dollars of market cap, one built a platform for SMBs to build their own smaller shops and sell directly to consumers. But people rarely realize that 70% almost of their revenue actually comes from payment. If you look at Toast, which basically built the entire POS ecosystem for restaurants in the US by replacing older, outdated software, again, 65% of revenue actually comes from payment. But in Indian context, if you applied the same, it wouldn't happen because UPI is free to a large extent, right? The dollars that you can make on are minimal. There's no 2.5% interchange that you can make where UPI is the dominant form of payment. So these comparisons and the nuances are very specific. Again, the largest, I would say after Amazon, what's the largest single platform that's been built is Instacart and DoorDash. If you think about Instacart is a pure marketplace. It actually picks from different grocery chains and delivers and has a convenience fee on top, essentially. That's their model. If you did that in 2014-15 in India, that's not going to work. So I think the nuances are so different. Or if you take a Chinese construct of I would say Pinduoduo or somebody like that, group buying ecosystems. There are a bunch of companies that have started, but they're still very small. So that's why I don't like these comparisons. I think India is unique. Our problems are unique. Consumers think about it differently. And therefore, what you need to serve the consumers is also very different. Similarly, for enterprises in India, the needs and the ability to pay for Indian enterprises is very different. And therefore, all the software that you build for Indian enterprises is going to be very different in the Indian ecosystem, and the value at which you can deliver. What you can really get in India is scale, but it has to be scale at low dollars, essentially. If you think about all the large telecom companies in India, pricing is ARPU is literally what, $300, something like that at best. But they have scale, and that's why they're huge. And then they've built layered businesses on top of that, like to the access to the consumer that they have through the device. So I think Indian businesses have to think differently. They will get the scale, but you have to deliver value both to the consumer as well as the enterprise.
I want to ask you about the next big roadmap that you're excited about, but just to follow up on what you explained right now, the point about India being unique, maybe we are now just beginning to see a handful of unicorns which have gone public or will soon go public, and are also on the path to profitability. As a VC investor, how do you look at it? Because the sort of layperson's understanding of the VC model is it's predicated on higher and higher valuations at each funding round. So, what is important here to focus on?
Yeah, I know that's how sometimes a layman thinks. But if you think about, especially on the consumer side, and I can give you a couple of examples enterprise side as also, your behavior is changed. Tell me that how many T1 households can survive without a Swiggy, Zomato, Big Basket, Amazon, Flipkart world? They can't to a large extent. A lot of your and my behavior 10 years back, and you can just open up your buying behavior history for 12 months, which I do routinely, and see how much my spend is, what it was in 2014, what is it in 2024. You will see a dramatic shift.
Yeah, of course.
And that consumer behavior ain't changing. And it's only means that you're spending more and more. I a bunch of these companies have taken a lot of money, um, because when the price is large, competition sets in. And when competition sets in, then it's a race to who wins this, because these markets tend to be oligopolistic in some form or the other. So if you think about the two largest ride sharing platforms in India, it's Ola and Uber. If you think about two large horizontal platforms, it's Flipkart and Amazon. If you think about food delivery, it's Swiggy and Zomato. If you think about quick commerce, it's four other people. If you think about services platform, it's only Urban Company. If you think about pharma delivery, it's PharmEasy and 1mg. So markets are large because the retail value is large, and the winners are two, three, probably four in each ecosystems. And therefore, when the price is large, you basically, it becomes a capital race early on in some ecosystems, and you have to be able to get consumers on and your supply on early on in a marketplace model. Also, I think we forget the 2014 to 2020 era before COVID, there was massive supply side and demand side subsidy, because that's how you weaned off consumer from their offline behavior to online behavior. And similarly, supply to work with you without having to go and serve their normally offline ecosystem. So there was a bunch of what I would call debt that was paid by some of these companies to basically change the consumer behavior. You came to them because of discounts first, but now you come for convenience, and the fact that's what your consumer behavior is. I would have loved if these companies became profitable much earlier, and that would be true for everyone, but that's not how it's played out. Even on the enterprise side, if you think about it, how many banks can now do without doing an online KYC? That's the product. How many of them can run of, like, without making an instant decision making using an API from Perfia somewhere? How many of them can run without a Salesforce ecosystem? So the behavior even in the enterprise world has changed, because what you would call consumerization has happened effectively. So you see that there as well. So I think this is a behavior change, and behavior change early on requires a lot more money than some of these than what you anticipate sometimes. And therefore they would have raised a ton of capital. I think uh, there would have been excesses as well. Absolutely, lots of excesses have happened, and people have paid for that by either companies sort of not performing well, going bust, going down. There are several examples of that. So in any natural business cycle, you would assume that would happen. When new opportunities increase, lots of people come in. There will be few who build successful, and a bunch of people who will die, and there will be excesses along the way. But the market has a self-correcting mechanism. So if 21 was crazy, 23 meant everybody, or 22 late, everybody came back to their original ecosystem, saying that 18-month or 20-month was an aberration. It was not net new normal behavior, either from the consumer or either from an investment perspective, where you could raise money at the drop of a hat, a value that you wanted. That's changed dramatically. So I would say that this business models take time to get to profitability, but when they do, they own the consumer and they can continue to multiply this over many, many years and build really large profitable companies. And now, as you say, some of them are public. That's the true test eventually of any company. You're public. Now you're accountable to a large set of shareholders. It's public money at stake and you have to perform. And if you don't perform, markets will punish you because it's basically a very anybody can short you, anybody can long you. It's all dependent by the numbers that you deliver. So you have to deliver quarter on quarter numbers effectively over a period of time. So I'm glad all these companies are going public. I'm really glad they're all going towards profitability in the long run, because finally you have to be profitable and generate cash eventually at some point of time. And that's true for any company. It's not an Indian ecosystem. That's true for any company in the world. Alibaba makes ton of cash, so does Tencent, so does Amazon, so does Apple, so does Google. Everybody makes gobs of cash essentially. That's the ultimate goal. Your path to it may take a ton of capital, hopefully low capital, and be very capital efficient businesses. But those are fewer and far, and I would love to be in more in capital efficient businesses than capital guzzler businesses. But sometimes hindsight is 2020.
Fair enough. But would you say you're optimistic that this generation, and of course, one must take into account that this pretty much happened for the very first time in India on the back of the internet companies like whether it's Flipkart or Swiggy coming up.
It's happened twice. This is the third time, I would say.
How do you mean twice?
98, 99, 2000. If you looked at the Infosys market cap of 2000 and in Infosys market cap of 2015, it was the same. If you in the Indian public markets between 2004 to 2007, and I experienced some of this being inside Bessemer, you could throw a stone and you would have made a 3x in Indian public markets. And it all corrected 2008 March onwards, 2000 September, Lehman crisis, global financial crisis, it all just went down. So I would say that this is not new. History repeats itself in some form or the other. So newer excesses will happen at some point of time. I don't know when and how. If we could foresee all the bubbles, then it would be very easy as an investor. But I would say that excesses will happen. And then down corrections will happen dramatically as well. And it's hard to do, easy to say that sell high, buy low. It's very hard to do it in practice. But hopefully you can ride through these economic cycles and build really large companies, because we are not public market investors who are investing in late stage companies. We are really investors in early stage companies who are trying to build categories or category defining companies over a period of time, or changing consumer behavior or building a new enterprise ecosystem. And that's very different, I would say, from public market investors. But excesses will happen everywhere. Excesses happen in bond markets, excesses happen in real estate market, excesses happen in equity market, excesses happen in venture capital market. So I would say, and there's enough history if you go all the way back from, I would say, the crash of 1931 till today, the Big Depression. So there will be a bunch of these that will continue to happen. That's just the nature of market forces.
Yeah. No, just as you mentioned Infosys, and that is what I was going to ask you about. Would you say that you're optimistic that, including this generation of startups and unicorns which have gone public and are now going public, are you optimistic that they will also become wealth creators in that broad sense? I mean, even today, even apart from institutional investors, sort of the man on the street, still would know an Infosys or a TCS or an HDFC as a blue chip investment. Do you think today's Swiggy, Zomato, some of the other companies will get to that status at some point?
I'm very optimistic they will. So if I again take back to history and see what was there was no Nifty then, because NSE did not exist. But if you looked at the BSE Sensex, what were the companies in BSE Sensex at that point of time? What are the companies in BSE Sensex today? They have changed. It used to be some other large manufacturing or trading organizations in the 70s and the 80s. The 90s was the rise of Infosys, HDFC, Asian Paints, a lot of other companies that you mentioned. And now that's what the Sensex is. And now you will see a different Sensex, I would say, in 10, 15 years. It's just started, right? However, the companies will have to perform, deliver great high quality numbers. And that's the only way they will, what you would call, become blue chip, as it's called, or large cap companies, be part of the Sensex eventually, which means there's so much automatic flow of money that happens just given the rise of that ecosystem, uh, index investing ecosystem. So I would say that that's going to happen, but and some will fall wayside, which has happened in the past as well. Not all companies which show the glimmer of hope will succeed, but I'm hoping a lot of these will succeed and build really large categories and be part of Sensex eventually at some point of time, because the nature of the world is changing, the consumption is changing, enterprise behavior is changing. It's more software dominated than it used to be. And you will see the rise of these companies eventually at some point of time. But I think we'll have to be patient.
Okay, fantastic big picture context, Vishal. So now let's talk about Bessemer's next big roadmaps. What are you excited about?
I think I would say two roadmaps that we probably are most excited about today is one is around direct to consumer that I spoke to you about, and second, I would say uh, cybersecurity. Uh, India is now a far more connected digital ecosystem than even it was 5 years back. Um, and and as you get more digital in nature, frauds rise. As you can know, cyber frauds rise. Our data, which is all important to us, and there's a lot of, the new act and everything else that is on the annual, um, will mean that uh, people will find ways to use that data to drive economic benefit for themselves, by using different means to either impersonate you, cheat you, swipe money off your, whether it's your demat account, whether it's your bank account, whether it's something else or something else. So that world will change dramatically. It's changing already. You probably read every day in newspaper about different ways in which scamsters are able to sort of fraud people in that variety of different ways. Of course, and the regulator is quite concerned, as you can imagine, because this is hard-earned money for a lot of people, essentially. And therefore, enterprises are also up on the curve. They are adopting different technologies. And I think there will be some global, but there will be a lot of Indian unique cyber ecosystems that will come up that are specific to us. Also, given the regulatory constraints around data protection, especially around financial data and healthcare data, which is all individual, very critical, and also very critical from a nation's perspective, you will see a lot more homegrown ecosystems that are going to come around this. So excited about that. We spoke a little bit briefly about the D2C world, the fact that there will be this new ecosystem of, I would say, 18 somethings who basically were born with a smartphone and a 4G connection in their hand. Their window to the world is that device, both discovery and consumption. And they would love to buy product services, discover product services all through that. And therefore, this gives rise to a bunch of newer brands which are um, which appeal to that target segment, who has its own identity in some form or the other and sort of relates to different world, are not necessarily driven by what I thought in the 90s or the 80s as a kid growing up, and what would be, yeah, because choices were far more limited, economics were limited than the today's ecosystem. So I think that's one big area that we are super interested. We continue to be very keen on the fintech ecosystem in India because we think that will continue to be very large. And when I say fintech, I mean software to a large extent. And I mean software, again, just when we build roadmaps, they think of them almost as like the tip of the spear. So we are very pointed in some way. Software building for banks, insurance companies, AMCs, brokerages, this whole financial world is all software driven to a large extent now, and lots of different plays in that. Um, and as more software gets built, it managing software. So to give you context, we think of UPI as a simple P2P transaction. I can transfer money to Hari instantaneously, but basically before it gets transferred, basically there are 8 different nodes that it needs to touch before it actually gets credited. And there can be a failure at any one node. How are you going to observe that? How are you going to manage that? How do I do KYC? How do I do video KYC? How do I do instantaneously? How do I do that AI is not spoofing your KYC? How do I basically underwrite you? How do I prevent fraud? Because more digital in nature, people are building bank statements which will show that they have great credit, but it's basically a fraud statement. I'm going to build more on that. So there are lots of layers that are emerging. There are all the, banks are, as they've become very large and as they've built different software for different ecosystems, they've become siloed in some nature. And therefore, where's the interoperability between these ecosystems? If Hari is a credit card customer, his credit card limit is let's say 10 lakhs. Why does he get a small personal loan ticket SMS for 50,000 rupees? Doesn't make any sense, because the credit card ecosystem is not talking to your banking, to your core banking solution ecosystem. They are different software ecosystems. There's no one customer view that happens for Hari across the world. Um, there will similarly insurance, health insurance. I'm very excited about the health insurance ecosystem in India and where it is going. It's a secular, several decade build, if you think about it. And we are what, 10 $12 billion of premium today. That will be 40 50 billion, whatever time frame it takes, 10 years, 15 years. And again, similar issues. How do I settle the claim? What are different mechanisms that are going to happen? Is there going to be a copay? What are the frauds that are embedded in that ecosystem? Can we do a package ecosystem? How can I basically look at all the data in a longitudinal way for Hari effectively over the next 10 years? Can I prevent some of the challenges that he's going to have or Vishal is going to have over the next 10 years early on by looking at longitudinal data? All that is possible today. So I believe this software platforms in all this whole ecosystem is an area that I'm very excited about. And I'm looking for several companies and founders who are looking to build in this ecosystem in some form or the other. At this one, the cybersecurity and D2C, I would say, are some of the biggest pieces that we are most excited about by today.
Is it time to raise a second fund at Bessemer for that's India focused or in this region focused?
No, so sort of we capital is not a constraint for us. Bessemer manages more than $80 billion, $18 billion globally. So we whenever we think that we are invested from our fund one and we need to raise our fund two, we will do so. I don't have any specific timeline or any specific that in ecosystem. As I said, we are here to find great founders who are building great companies in areas that we are super interested in, which I described to you. And capital is a non-issue. We can write from $1 million to $50 million check sizes. So we can support companies from very early in their stage to also scale as they scale, which is very useful for a lot of founders and companies because they have a partner who can scale as they scale their businesses. Also, it's long-term patient capital. We can remain invested for several years as we can see in a lot of companies where we invested for more than a decade in some cases. So we tend to be long-term patient capital which can scale as the founder scales and also scale with them globally because we are a global partnership with 7 offices today. So I spoke to you about the story of how we started India office, but we have also an Israel office, we have a London office, and now we have a Hong Kong office. So we are across all the geographies, and especially for some of the businesses as they scale from India to other geographies, that can be super helpful because we can bring in all those networks and connections and including larger capital base as if your need be as you grow into those other geographies. So that's how we think about capital. Capital is not a constraint for Bessemer.
Okay, so getting back to the roadmap question. Um, so AI has applied to specific opportunities within software for fintech or software in cybersecurity. Um, I was reading about Palo Alto's increasing platforms approach, and on the other hand, a company like Halcyon, which has just raised money to so very sort of focus, very specifically focus just on the ransomware tackling opportunity. Is that how you think startups in India will also start coming up? On the one hand, really broad opportunities like building a platform for something, and on the other hand, an opportunity to go very deep in some particular area. Do you see that already happening?
We see actually already see that in some of our companies. So if you talk about one of the companies that we invested early on in 2017, which was building software primarily for banks on underwriting instantaneously, a company called Porphyos, they today now operate in 15 countries, including Southeast Asia, Middle East, Europe, Latin America. So they are very deep in a specific area. A lot of their work is about, at the back end, is data machine learning. I think of AI as like a horizontal layer that can be applied in a variety of different use cases. They are using it for financial decision making for banks and large fintechs who have to make underwriting decisions, who have to make fraud decisions, who have to make know your customer decisions, who have to make collection software decisions. So all of those essentially is what Perfios can power for them. And that nature remains true whether you operate in India or whether you operate in other geographies. There may be different nuances, but just India actually has leadership in this ecosystem globally in some form or the other, just given our digital nature of payments and digital nature of banking sort of surpasses most geographies globally in some form or the other. So we think all of these are applicable globally, and some of these companies, they are still early in their career of building out large global franchises and platforms that you mentioned, and they will eventually become some of these platforms in the long run.
So today, would you say, in many ways, if you look at the Indian SaaS sector, there are of course some outstanding names, but on the whole, would you agree that it's still at a nascent stage? And on the other hand, entrepreneurs are beginning to crack how products are to be built if they are to scale those products into actual companies that are global scale. You think that playbook is now happening? I mean, not just necessarily about SaaS companies, but in general, product companies from India.
Yeah, I think Indians are great product builders. I think where we are not that great is GTM, go to market sales. So though as you said, there are some very successful names in this ecosystem now, like Zoho and Freshdesk, and there are the emerging ones that are coming out, which are a few $100 million of revenue now.
Right.
And as you see over the next 10 years, I would say several more will emerge. I've always thought that a lot of Indian products are deeper in certain sense, are more cost effectively But I think we are still in the learning phase of the GTM of a product and how to deliver that. And some of these companies who have been very successful, as I was saying to you earlier, uh, people who are coming out of these ecosystems know how they have cracked the code inside in a different ecosystem and now doing it for themselves. And I think that's starting to emerge now. Um, One thing I would say is that for companies to become really large, if you want to compare ourselves to some of the very large global platforms, for that you will have to be a global company by far. For example, um, uh, a large percentage of revenues for some of these large platforms is outside of the US as well. So you have to be global in nature on day one. So I would say US is the largest software market globally. So you have to be able to get there and build a company in the long run to be able to scale to $1 billion plus revenue eventually. And be, being able to do that is not going to happen overnight. It's going to take at least a decade for some of these companies to get there, because that's a very large number to get to eventually. Few have got there, few will get there hopefully over the next few years, and more are in the offing. But I would say that for some of these companies, it's still early days. The ecosystem is still early days relatively. And you will see a lot more success, I would say, over the next 10, 15 years.
Specific to fintech, and if we were to ask you to pick one thing that you see as the next really big opportunity in India or the biggest fintech opportunity in India, how would you look at it?
I hope I knew it upfront. My job would be easier. But um, as I said, like I was describing to you, there are two or three sort of areas which are super interesting in the ecosystem. I would say one is uh, that the banks are undergoing a sea change on their software ecosystem. Even the core banking solutions were built in early 2000s. There are basically three that operate and run in India: uh, FlexCube, Finacle, and TCS banks. That's 100% market share between three of them. But they were all built in a different era, um, where and they're on monolithic architecture. They are not modular software, which can integrate and work with several other pieces of the software. So I think that can be a very large but a very difficult opportunity. Very large but very difficult. And I think several banks globally are also going through that phase now, because most of the people on core banking solution are in that ecosystem. I don't know how much emerges out of that, because uh, selling to banks can sort of, you can get older and lose all your hair before you get first sale done for a core banking solution. But that's one area. I would say similarly on the insurance ecosystem, there's this massive change that's happening on policy, admin, um, accounting, all of that at the back end, which needs to change, because all this were again built in a different era. And now, so these are what you would call core insurance solutions at the back end on which they run their platforms. That's one other interesting area. And then the wrappers around it are something interesting. A lot of people are trying to hollow out the core, if I can say that, which means that you don't need to change your core, but the core effectively becomes like a record keeping, and all transactional ecosystems happens around the wrapper, and I can own a bunch of these wrappers, both on the insurance and on the banking side. I think those, I would say, both are super interesting. I count insurance in the fintech ecosystem. It's not only banks. And there again, as I said, specifically in insurance, the most interesting piece is health, because that's the largest growth, largest spend, and there'll be lots of newer ways in which uh, how your insurance. There is no OPD insurance, for example, in India, right? Uh, I'll give you a funny story. We were buying insurance about 4 or 5 years back, OPD insurance for Bessemer ecosystem in India, and there was an insurer, I won't name him. They said we can give you 25,000 rupees OPD sort of for your glasses and for your GP visits and diagnostics, but we'll charge you 23,000 rupees premium for that because there's no integrity of the network that exists, right? So I think that ecosystem is going to be very large if you think about what's happened globally, because that's also where the largest spend is. So I think these are the 3, 4 areas in and around fintech, I would say, some sort of quasi health tech, I would say. But those are the 2 or 3 areas which I think will be very large. We have, I don't know which companies and which entrepreneurs. I hope we can find some of those and invest and be partners with some of these founders to build some of these companies. But those are some of the areas that I'm very excited about personally.
You didn't mention crypto, and I'm wondering if that might come back to India as an opportunity. Will there be a knock-on effect with Trump pushing it in the US?
I don't understand crypto, so I don't invest in it. Very simple answer.
Okay, I mean, coming from you, that in itself is great commentary on how one should look at it in India, I guess. Fair enough. And just to ask you a follow on my Trump curiosity, I mean, again, from a general audience's perspective, this entire conversation's shown our audience your mastery of the big picture in India. So in that context, can you give us a sense of how you look at it? I mean, will there be anything that will change for India because Trump is going to be president in the US?
No, I wouldn't say so. It's a very. I think India is probably the least to fear in any sense. But I would also say, the India-US partnership doesn't matter who's in power either in the US or in Indian context. I think that's changed dramatically over the last 20 years. It's shared values of democratic ecosystem, shared values on building and growing and doing the best for your own people while taking care of your own national interest paramount, everything else. But I don't see any change in that irrespective of who's in power or who's not in power, because none of 4 years or 5 years in an Indian doesn't change anything. It's a multi-decade piece that has already happened and will remain, I would say, over the next several decades. And I think that's and it's actually our interest in them is nationally driven interest, because access to technology, access to capital, and vice versa. This India is the largest, fastest growing market for U.S. companies to come and invest and take advantage of that market. So it's, if you think about it, it's all about economics and mutually beneficial interest for both countries. As long as that remains the same, I think that interest will continue.
Yeah, to ask you a bit more about on that thread of India as an attractive market. On the one hand, there's a certain kind of quote-unquote deglobalization, if you will. Certainly in high-tech areas, all the rich countries are looking to bring back manufacturing. They're looking to prevent China from getting some of the technologies. So if more of the high-tech is going to happen closer to the home countries, whether it's in Europe or in the US, would you still say that your LPs and investors who look at markets like India in general, would still find India as an attractive market from a access to VC money perspective for a startup that's going to start in India or that's looking for money in India?
I would actually say this is probably a great opportunity for India. I think of it completely reversely. That the fact that if you think people are gonna, I would call it friend shoring, versus necessarily move everything back to their respective home countries, because that's not possible.
Of course.
Global supply chains will remain to a large extent. You may pick pieces of it which you can do, but majority, large percentage will remain global in some form or the other. But you would not put all your eggs in one basket, which you had done previously, and now you would want to spread it and spread it in more friendly baskets, more in those baskets where you think there's uh, shared values, democratic nature, rule of law, and that bodes very well for India, I would say, in that context, where a lot of manufacturers would want to be here. Also, remember they would also be want to be closer to where the market is. This is a very large market for all manufacturers in some form or the other. For consumption, and therefore why wouldn't you want to be here if consumption is here, because that's the lowest cost, being closest to the consumption, right? And also in a friendly country in some form or the other. So I would say it's a massive several decade opportunity. Also remember, these global supply chains are not going to disappear overnight. Even for India to get into, we are already in some of that. We have made a ton of progress, I would say, over the last decade or so. But it's slow moving. If you're going to build semiconductors, it's not going to happen overnight. It's a decadal piece and lots of capex before any of these show up. And also you will start at a base level and then slowly climb up to the highest category level. And it doesn't, none of this has happened overnight in any country. It's happened over 30-40 years, and you have to be at it, and you will see a similar journey over the next hopefully 20-30 years, that you are able to do it in India. And I would believe so that it would happen, because this is the probably now one of the largest global consumption centers.